Monday, March 3rd, market analysis, Stan Ehrlich. Good morning, beginning of March, 9:44 California time, middle of the trading day. Stock market traditional hours. Here in California, 6:30 in the morning until 1 o'clock in the afternoon. Now, I'm going to make a comment this morning. If you are interested in having me analyze a particular symbol or market, you know where to reach me. info@ersignals.com. Just send me an email. I'll see what I can do. Now, I've been looking for a downside correction from a test of resistance levels, and that was a couple of weeks ago. And that's exactly what I talked about for a while until finally it happened, which is now past tense. And in the E-mini, we came down to a very critical level, a support level, basically the lows that were made in early January and about late December, and pretty close to also some lows that were made in early November and in early October, which defined in those four time frames a support area, which on Friday we bounced right off of and closed on a strong note after having gotten into oversold condition most of last week. So we see a little bit of follow through to the upside this morning. Now, just because it's oversold and touched support, which is a great reason to believe that the market's going to bounce or rally some, does not mean that it's a major bullish turning point or tell me how long it's going to last, or much more simply that there's going to be a bounce. And we got one this morning. It wasn't and hasn't, it's not necessarily over that much of a bounce. So around unchanged to a little bit lower at the moment. The 1 minute data on the E-mini shows us a sideways range since, well, a little bit after the opening this morning at 6:30, dropped off some more, hit a low, bounced back fairly well, didn't make a new low, didn't make a new high. So we're a little bit stuck here at slightly lower on the day at the moment. I would not be surprised to see it fall apart again and go down a chunk. This time, if it does start to fall apart, we're going to be breaking some major support areas and maybe have some very big down days. On the other hand, support, oversold, a little bit more of a bounce. And then I do think we're going to see those new lows. But the question mark in my mind is bounce or no bounce. Are we going to see new lows? I definitely expect that. And I do within the next week or two. New lows. And again, it may happen very quickly. So I'm not bullish. I'm just a little bit friendly for a bounce in the stock market indexes in the very, very close near term this week. And we're looking at the spider, basically the same story, of course. Again, the critical lows in general were about December 11th, I think it was. Well, not necessarily. It was a January 11th. Yeah, about January 11th. 13th in this particular case. Closing below that would be a breakout of a double top formation in most of the indexes, not all of them, and produce a downside objective. In this case, the spider down to 540, let's call it 543 or a little under. That break should take several weeks and maybe a couple of months, but it's not, in my opinion, the beginning of a bear market. It's not the beginning of a big, big bull bear move, but it is a larger correction than we have had so far. Now you got to keep in mind, look at the move we have had here. Wow, since the October lows, which is not on the screen. Well, there they are. I'm sorry. That's the bottom of that particular 1 year bear market. And it was October 22 with a bullish engulfing ER buy signal smack dab on the bottom. And yes, that was a head and shoulder bottom of significant size at the time. I detailed that day by day, and it worked out unbelievably great. And here we are, years later. So it's gone up quite a bit for quite a while, and not necessarily acting real good lately. So for a couple, 3 months now, we got this double or triple resistance level and came super close to a bearish breakout. Okay, enough of that. The 1 minute SPY. Nothing here that causes me to be screamingly bullish. And I'm very cautious about downside moves because they could develop into something very, very, very sharply lower for a short amount of time. And we're looking at the QQQ. Now, it did break the lows that were made on January 13th, but it didn't stay there. And so you have a little bit of a bear trap, a little bit of a false breakout during the day on Friday, and it jumped right back up. So support held, although it got cracked somewhat. We did break it, but not for long. And it was kind of like a ping pong ball being pushed underwater, bounced back awfully good. And today we're basically unchanged at the moment. So the rally is nothing to write home about. I'm concerned that, it's going to fall apart soon, just like the E-mini, of course. And the QQQ 1 minute chart is a little bit of a pennant, sort of, this morning so far. Resistance levels on a short term, very fine tuned basis, stopping the rally that we've seen so far this morning. The NASDAQ futures did break its January 13th low on Thursday of last week, even on a closing basis. But Friday's downside follow through resulted in that ping pong ball being pushed underwater commentary, and we popped back dramatically well. But the follow through upside this morning wasn't very much, and here we are fiddling around unchanged. Again, the short term move here, and I hesitate to use the word trend because, frankly, for the most part, you don't see trends change in a week. They can if they have really, really big moves. This is not small, but it's not that big either. I would say it's a fairly medium-sized move, but it's doing some damage to the intermediate term bullish situation because you do have a double top and it's trying to break out on a closing basis and stay that way with some follow through. The downside objective would be 18, we'll call it 19,000. Next. And the NASDAQ 1 minute chart is something like a pennant formation for a little while, a few hours this morning. Okay, what about the YM? Well, it also made new lows, but it's not quite the same chart. Yeah, it has somewhat of a double top. And yeah, the downside objective I've measured at 38,300-ish will come into play if we do close below 41,983 or 41,970-ish, I meant. So it's not even close to that. It's holding up a little bit better than the other indexes. And we have a minor new high today for the previous 5 days. But it ain't going through bear trend lines. It ain't going through any resistance. It ain't doing anything but bouncing a little bit. I can't get overexcited on the upside at all, and I'm concerned about it breaking down any old time. YM 1 minute chart. Nothing here to comment about in any major different way than what I've been looking at on the other indexes. And the Russell, a different animal. New lows since September. Major historical support area, the red zone. We are oversold. And by the way, I want to mention something else. The E-mini is not, and this is the daily data again, oversold or even close. The S&P was oversold. Wait a minute. Hang on. Let me go back. Yeah, that's correct. We were oversold in the E-mini. We were oversold in the Spider. We were oversold in the Qs. We were oversold in the NASDAQ. And now we were oversold in the YM. Looking at the Russell, we still are and were oversold. So all of them deserve a bounce. But again, no major signals, no real good, strong, bullish developments. And the Russell 1 minute chart. Let's go to bonds. Again, another new high. Great. Remember, I'm talking about the last few months, a broad double bottom formation for the last approximate year and a half. The first low was October of 23, so that gives you October of 24 for a year, and we're about 6 months later, a year and a half. We had a low in January 14th, which was another bullish engulfing ER buy signal on both major bottoms. We have buy signals. ER signal, bullish green, reversal, oversold, blah, blah, blah. So that's great. So I am trying to justify a long-term bull move that may last a year or even 2 years. I don't normally talk about long-term moves, but this one I've got to mention because it looks good so far. It'll take quite a long time for it to develop. My upside objective is 146 on the bond continuation contract. So, new high at 18 and change, almost 19. We're there now, looking good. But hey, we're overbought. Don't get excited about the long side because we're about to have a minor downside correction and then go higher. I think the correction could be back to about 116, a little bit below 17. And I wouldn't rule out 115, give or take a little. And it may take only until about the middle of the month. If that's true, and we top out around here or a little higher, and then come down to the middle of the month, and the price levels are approximately around 115 and a half or a little lower, a little higher, but around 115, then I'm going to start screaming bloody murder about a big formation bottom, which started back in October. But there's a lot of things to happen between now and then. Next, I can say the same thing with slight modifications on the timing and the price levels for the notes. Notes are right up now, close to the highs that were made December 6th. So that's resistance. And I've marked it off with the resistance zone here in yellow. And today, the high is right on the top of the zone. The current prices are right on top of the zone. We are overbought. I got 3 reasons: overbought, resistance, and a previous high, which is kind of like resistance also, to expect a modest downside retracement. And it wouldn't surprise me if it was a week or two, and that would cause me to be very optimistic about something much better, much more bullish. And you know what I'm talking about, but I'm not going to divulge it right now. I'll let you think about that. Crude oil. Little bit of a bounce. Today's tick is low. Tick is 1 tick higher than yesterday's low, therefore no outside trading range. We did make a slightly higher high. We came super close to being oversold, but not quite. So not surprised it's bouncing. And I don't know, what have we got here? A really big sideways, a lot of nothing for darn near a whole year. Actually, it probably could be easily said that it's been a whole year now. So we've got huge resistance above at around 80, very good historical support around 64 down to 62. And where are we? Between a rock and a hard spot, but you got good sized swings in either directions. So what are we going to do now? I think we're going to rally a little bit more. Not quite sure how much. Heating oil. Pretty much the same commentary. Last week, almost oversold, almost into a support level, and trying to bounce Thursday, but Friday came down slightly, and now again, we're testing the support, the minor new lows. This could back up a little bit more, come down a little bit more into the support, get officially oversold, and then have a bounce. But I think a bounce is coming soon, maybe after slight new lows. We're looking at natural gas, and it does have a bullish engulfing today, but we're nowhere near oversold. In fact, very, very neutral RSI numbers. But I love the bullish engulfing, and the trend is up. And it was overbought, testing the top of resistance area, and did have a normal size pullback. the reaction or downside retracement was almost as low as I thought. Today's low is not quite at 3.6 or 7, but pretty close. And then all of a sudden reversed like crazy. So I think we're starting to head north again. Going to test the resistance level top at 4.366 and maybe break through it on the upside. So I'm turning friendly mostly because of the bullish engulfing. Next, we got a little rally in gold. It came back to support pretty accurately on Friday, closed on its butt, but that's spelled two different ways. The rally today is slightly higher than Friday's high, and the trend is up. And we were not too close, but fairly to oversold. So I think we're starting to head back up again. And gold, silver is almost exactly the same commentary. Copper is almost the exact same commentary. So all three have reasons to rally a little bit more than today's rally so far. And all three are coming up pretty good. Now, this is not copper. I'm sorry, platinum. So gold, silver, and platinum. Copper is, yes, basically the same. So the metals look like they're going to have a little rally here. What about grains? It turns out that the grain complex is very similarly in the same condition. Only soybean meal is not oversold as of today or within the last few days and today. And in some cases, they are back down into support areas that I have been talking about and expecting to be tested and looking for a turnaround very soon now. I think this week, and I think maybe early in this week. So now soybeans are oversold. Coming back to a previous bear trend line, approaching a little bit of a support level, one of the last significant support levels. And so I'm beginning to talk about not much lower, about to turn around and start to move up, which I would love because I'm talking about long-term potential bottoms in grains. The low that we have seen back in August and the lows that we saw back in December are about the same, similar, and therefore potential double bottom, both of which were oversold. And if we turn up here, nothing wrong with this retracement. All we have to do is start closing above 1097, let's call it 11 flat, and that should produce a bullish breakout of a double bottom formation, producing a rally up to 1207 or higher. Big move. Next, we're oversold in soybean oil at a support area. I think we're very, very close to turning back up again, and it has a formation, which I'm so far still calling a head and shoulder bottom. The neckline does slant upwards slightly, and I'm looking for a lot higher levels if this pattern works out. But it's got to turn up soon, and it can't go too much lower. But hey, support, oversold, classic combination. I think it's about to turn up. Soybean meal doesn't match the description quite perfectly. Close to oversold. Yes, at support. And does have a broad double bottom potential. So it could turn up. Not quite for the same good reasons as the other two, beans and oil. Corn is oversold and has dropped off dramatically and is very oversold at 12, 13. So support, extreme oversold, big down days, the last 2.5, today being half done, and should turn around any time. This is great. What about wheat? I think the wheat market is getting very oversold at 20-ish, at a support area or a hair under. Big support, could have a broad double bottom, and you might even start talking about a triple, considering that the low today is pretty close to other lows. But you got to start turning up. So I think it is also ready to turn back up in wheat. That's 4 out of 5 oversold support. So a variety of reasons that should turn back up again. Next, we're looking at cattle. almost up to unchanged, nosedived into support, almost oversold, and it is trying to reverse to get higher on the day, but not quite yet. I think there's a good chance it'll still do that. Next is an oversold condition in hogs. Second day. Now it is higher than Friday's close. Again, in support and oversold, and now higher on the day. We could have a bullish engulfing today, ER buy signal, and the price action would turn green and the RSI would turn green. If we get above yesterday's high, that would be great. Hasn't happened yet. There's a chance it could. Next, support on Friday being tested at the lows very accurately, and the top formation is still developing, but because of support and oversold, I would expect a little bit more of a bounce short term, and that's E-mini. That's a E-mini like I talked about earlier. I thought this was something different for a moment. I was just looking at the price action. All right, on the E-mini, we're coming close to some minor support. Remember, I don't trust it much as far as a further bounce, and it could fall apart at any time. And heck, it might even be starting now, but I'm not sure about that, and I won't necessarily say that that's the case. That's it. A short one today. You guys have a great trading day and profitable trading to you.